Good morning, everybody. Welcome to the Flow Show, Thursday, the 15th of May. And nice sunny day here in the UK. I don't think we've had this run of sunshine for a long while, Kay. It's all looking nice and glorious at the moment.
Oh, morning, Ryan. Morning, everybody. Are we off to the beach after the Flow Show, mate?
I'm already there, mate. I'm doing this from the beach.
Oh, okay. Oh, that's what I hear in the background. Yeah, the
Pints being pulled, yeah, in the beach
yeah.
bar. I wish.
Or is it the drilling platform in the distance?
Yeah, it could be. Yeah, I wish I was on the beach and living only a couple of miles away from it. It does have a big draw. Right, let's get stuck into things, see what's going on in the world. Going to start in China. Well, China, Mexico. China's foreign minister says China welcomed more Mexican products into the Chinese market and will encourage Chinese businesses to invest in Mexico. The Mexico peso has been doing rather well of late, and news like that is going to help it along as well. Bit of data out of Down Underland, jobs data, and a rather stellar report. 89,000 jobs added, well above the 21,000 expected. A big increase in full-time jobs and part-time jobs. Got a good look in as well. What was even better was that the unemployment rate stayed unchanged at 4.1%, even as the participation rate jumped 3 points. So more people coming into the market, that can often lead to unemployment rate going up, but it didn't. It stayed unchanged. So all guns blazing for the Aussie jobs market over there, which could keep the RBA from speeding up any possible rate cuts down the line. Aussie looking like it's taking on a bit of shine, but it's doing a bit like what the pound does when there's good data out. It
Yeah,
go down for any length of time.
yeah. I must admit that the dollar is one thing, but then Aussie is even a bit lower versus in the crosses. And that's a bit of a bit of a mystery to me. Why? I mean, it is a strong report, isn't it? I mean, I'm not sure whether the RBA will not look through this one, but I think if you look at that, that even like the participation rate going a little bit up, still creating 90K jobs, full employment is doing all right. I mean, this is not a report for the market to be worried about the Aussie, at least not
Yeah.
right now. And yet it did not hold the rally on the report. And as I said, especially on the crosses, well, not versus Kiwi, but then if you look at other crosses like Euro Aussie, Sterling Aussie, and etc., still trading higher on the day, which is a bit puzzling to me. I don't know why.
Yeah, probably more the influence from what's going on in the euro, isn't it? I think
Yeah,
the bigger
euro
company.
or the equity market coming back a little bit, copper coming back a little bit. There's always going to be an excuse why
Yeah,
something is failing. But I find it slightly puzzling why the Aussie is lower on the crosses.
yeah. An Aussie dollar, yeah, it's stuck with the dollar like everyone else, but there's certainly far less volatility than we're seeing in the likes of cable euro dollar at the moment. Really is stuck between this sort of 64.40. Can't hold over there for any real length of time,
Exactly.
and the dips still keep getting bought. So something's going to happen here at some point, and it's either going to be a breakdown or a break up. But
Ah,
yeah,
ah,
one to keep.
Thank you, Pete. That may be a fair explanation of why the
Oh,
market
here
is
we go.
shrugging it off.
Yeah, could be. Thanks, Pete. Good info. Good info. Right, let's go on to some UK data, which is also looking bright for Q1. We've had a little bit an improvement to 0.7% in that GDP number from the prior 0.1% in the previous quarter. We also had the monthly number out as well, coming in at 0.2 versus flat expected. Even a year-on-year quarterly number revised up as well. Though a bit negative on the industrial production and manufacturing numbers, all coming in as negatives as expected and turning around the positivity we saw the month previously. Some talk in this that we may again be seeing the effect of front running tariffs and the likes because this is Q1 data and that things might take a wobble now that all the higher tax things have kicked in April, but we're obviously not going to see that until we start getting the GDP data for those months, or the month of April and May. So maybe we see a bit of a reversal. We saw, if you look at GDP generally, we have seen this sort of activity before in the early part of the year. You've only got to go back to last year when we got to GDP turning around a week end of the year into the new year. March, April, Q1 seems to come in a bit positive there, and then it all sort of dies a death for the rest of the year. So there's a bit of a seasonality thing going on there potentially in GDP, but good numbers is good numbers, and for now it's going to keep the quid moderately supported depending on what pair you're going to be looking at. Voices were out of the piece yesterday saying ECB supervisors are going to step up checks on banks over potential dollar funding issues that might come from anything to do with Mr. Trump. They say that some of EU's largest banks will be assessing unprecedented scenarios of the Fed not providing dollars, which, well, there's probably more chance of me growing hair than that not happening. But ECB are on their toes anyway regarding that. Feds Jefferson says current moderately restrictive policy rate, we have a current moderately restrictive policy rate. It's in a good place to respond to economic developments. It says recent inflation data is consistent with further progress towards 2% goal, but the future path is uncertain due to tariffs. It says Q1 data was overstated in showing a deceleration in activity. Fed's Daily was speaking last night, said monetary policy well positioned and moderately restrictive. Growth and labour markets are solid. Inflation is declining. It says there's been a shock to sentiment, but that's not reflected in any broad pullback in spending by consumers and businesses. Mr. Trump, he's been dealing away over in the Middle East. And lots of firms are over there also getting deals done. So Saudi's Public Investment Fund, a huge fund they've got over there, has signed an MOU with Northern Trust for up to $1 billion worth of business. BlackRock, never far from these sort of things, also saying that they're going to continue their strategic collaboration with the PIF to further develop and accelerate growth of capital markets in Saudi Arabia. The White House released a statement saying that Trump signed agreements with Qatar to generate an economic exchange worth at least $1.2 trillion. Also announced other deals totaling $243 billion between the US and Qatar. Trump was obviously waxing lyrical about it, says they're very close to an Iran deal and that he's raised trillions in investments from this trip, at least 10 trillion in investments and potential investments. He also said that when Besant speaks, the markets listen. Kate's all going well over there. No wonder he dragged a load of long list of business heads over there. They're getting deals done.
Yesterday, I thought I was funny and clever to title the Flow Show the $1 trillion day in comparison to the $1 billion day we had 40 years ago. But I should have named it the $10 trillion day. The $10 trillion day. It's the same as always. Promises of investment. We don't know over how much time it's going to be spun out, but it's like data. You can't ignore them because their Middle East trip is really going extremely well, and that is something that we can safely say. I mean, I think the 30 main US CEOs, all companies combined, are over there on the trip, and they're all striking deals left, right, and center. And Yeah, BlackRock is probably going to get another $5 trillion under management. So yeah, it's I guess it's one of the reasons why the dollar is not falling out of bed. Spoke about it yesterday as well. I mean, overall bias seems in the market that there's still a bit of not decoupling or whatever, but a bit of deleveraging from the US. But if you see deals like that, you can hardly look besides it, right? Those are big numbers, and the outlook for investments over in the US are real. So perhaps we should be a bit cautious right now because, and as I say, it's not going. Those dollars are not going to flow into the US today, right?
Yeah.
But we trade on expectations as well. So perhaps that is holding the dollar back from dropping further right now, despite those Asian dollar moves. Yeah, I think that's where we are. I mean, it is definitely a very good trip.
Yeah, exactly. And said at the beginning of the week, this trip to Saudi is probably stuff like energy is going to be the small news, and it's going to be all the investments and stuff that is the big news, tech and whatnot,
Uh, and and Trump's airplane. Huh?
and Trump's airplane, of
Oh,
course, which
don't forget
they're
Air
still
Force
heavy
One,
over.
Air Force One bis. Huh?
Yeah, Air Force Sand Blaster. Right. Speaking of trade deals, Bloomberg sources reported yesterday that the US is not seeking to weaken the dollar as part of trade deal talks. Apparently, some people were getting a bit antsy that might be the case, but apparently not. And Fox Business reported that trade and tariff deals with Japan and South Korea are said to be close as well. Kay, is that why we're seeing a bit of a bid in the yen since
Yeah,
yesterday?
that's what happened. Remember, we had the same thing with dollar Taiwan last week,
Yeah,
and we saw the same effect. Dollar got hammered, especially on the yen as well. Um, but then it came after last Friday's move. It came back, right? The dollar came back. We're seeing kind of the same thing if you look at other majors for the dollar moves, but the yen is holding its ground better because Kato has been saying he wants to meet Besant again in the at the G7 next week. So I would suspect that until then, the yen may kind of keep a bit tone in general. There's going to be up and downs like the yen usually does. I'm not a fan of starting to sell dollar yen right here, but perhaps look at other crosses. But I'm very neutral on the yen right now. I had a view for a bit of a weaker one, which I expressed through the sterling yen. That was okay, but I went out of that, luckily at a very good level. But now I'm kind of neutral for the yen because I still don't rule out, since the Japanese have been telling us that they go over there in the G7 and just explain what they have been explaining all the time, is that they are not manipulators. On the contrary, if the yen drops too fast, they will intervene. And I don't see them unless they go over there with the promise that UEDA will continue to hike rates, for instance. Unless something like that comes through, I don't see why they would go over there and say like, yeah, okay, let's strengthen the yen.
yeah.
Uh,
So I'm saying it on Tuesday. They had all this at the last G7 meeting, and they got clearance in the FX statement, and Besant said, "Yeah, no problems," and they want to they want to go and open up the conversation again. So I don't know what they want to talk
yeah,
about.
I yeah. The thing is, you have like, well, I mean, one side talks one way, the other one talks the other. But if you listen to Ishiba, he's not ready to make too many concessions because he so far his line is just cancel the tariffs and then we'll talk, you know. So there could
Yeah,
be quotas on production coming. But well, for now at least, I'm leaning towards the side that they are not going to just go and tell Besant, all right, let's strengthen the yen. I think that side of the equation is
yeah.
strange to me.
And aside from like this, like you say, sheep are saying things. I think one thing we need to be careful of is that we've had a bit of silence. Well, it's all gone quiet over trade discussions. So we've had this Charles Gasparino at Fox Biz saying that deals are close. That could have some truth to it because they've gone quiet about it. You know, throwing out what we're talking about. Yeah, they've spoken about China, and we're watching that and assessing that as the basis. But I don't know. It's just gone a little bit quiet, as I say, on the detail front to do with deals. So maybe something is cooking. Sometimes silence can be louder when someone does speak. But anyway, so yeah, I mean, look, taking dollar yen. I mean, I was long. I got knocked out on my trailer's stop. Managed to run it pretty much up to the highs, and you know, this is the markets we're in. 1 minute you're looking like you're going for the moon, and the next minute you're looking like you're going back down again. But we're still in this uptrend. It's still very valid. We back below this 38.2 though, which is a bit of a worry, which was a bit of a level anyway around this 147. But yeah, with nothing to say this is ready to break yet, unless we're going through this 145 zone here. If we're going through there, then maybe this is going to fail, and then we'll see what happens if we get back to this low again. But I still think I'm a bit of a, I don't know. One day I'm a bit of a dip buy, the next minute I'm a bit of a rally, sir. You just can't pick a side at the moment. But
you are the perfect reflection of the short-term market, Ryan.
Yeah, exactly.
We are all there. Unless you are a long-term investor and you have programs to do stuff. Look at the moves. Just look at the moves. Look at the moves in euro dollar. Look at the moves in cable. Look at the moves. And this is not a market, at least shorter term, that has a clear direction. Yes, overall the dollar is still weaker than when we started. I mean, euro dollar is at 112. We are not back at 108 or 107, right? Cable is also still comfortably, let's say it above 130. We are not back in the 120. So there is this, I wouldn't say constant, but those waves of let's see, and we don't really trust it. But if you look at the day-to-day moves, yeah, I can really understand people having those kind of feelings of one day there and one day not, and that's why. And you have the same kind of trading for most of the positions. That's why we slice and dice, and let's not put our position in danger. It's perhaps a little different for stuff like dollar mix, but if you look at the majors, it is just the way we have to trade. Unless you're long from, I don't know, 108, 107, 105 in the euro dollar, and you just go like, yeah, okay, whatever happens, 2, 3 big figures, I'm not going to be bothered. But yeah, if you trade intraday, and it is just the way this market trades right now. Yesterday, you looked at the speed euro dollar and other dollar pairs were coming down. The speed it went up at the start of the day. That thing was going to trade 115 at the end of the day. Well, no, 112, 65, 70. Here we are again, solid as a ceiling. Just bang its head against it, and we dropped a big figure. And so this is still what we are in, and I think the way we trade it right now with our shorter term positions. I do have a long term silver also running, but the way we trade our short term positions, I don't think we should change this slice and dice right now, because this is the way it functions right now. Just get your risk as close as possible to zero as fast as possible by slicing and dicing, and then the market will tell you what it wants to do.
Yeah, exactly. And you know, sometimes you don't. You know, I have lots of levels on my charts. Okay, lots of levels here, but there's probably only 2 or 3 at the moment, given the vol we've got in something like dollar. There's probably only 2 or 3 levels of those that I'll trade. 145, the one I traded previously. 142, the one I would like to trade. And you know, because I don't know whether we're going up 200, down 200. So rather than trying to have 15 trades in the middle, I just maybe have 2 or 3 trades. If they go wrong, fine. It's only a couple of trades that go wrong rather than 5 or 10 trades go wrong. But if they go right, well, then counter-wise, then you're going to make some money. So, a lot of people get stuck in the very, very short term. I've noticed, because there's vol. I think they're going to catch every swing in the day, intraday, whatever. And 1 minute, as you say, the sentiment's one way, next day the sentiment's the other way. So you just got to be careful, got to be choosy about your levels. I think is a good thing as well. But anyway, let's move on. A few more headlines to get over. So we've got this stuff happening potentially in Turkey between Russia and Ukraine. Ukraine has been saying, and Zelensky's been saying, he's going to be waiting to see who will represent Russia at these talks. It looks like Putin isn't heading there, so there's not going to be any one-on-one communications between those two. That was sort of confirmed by Moscow Times sources, saying that Putin's got no intention of accepting Zelensky's offers to meet one-on-one in Istanbul. But there are meetings going on, but with lower political members of both sides. Trump doesn't know whether he's going over there or not. At the moment, he's not, but he said he might go over there Friday if there's something to go over for. So we've potentially got something cooking in this situation as well, Kay. But at the moment, it's not Putin-Zelensky meeting, but we still might get a ceasefire or something coming out Friday, the weekend. Is Risk still going to pay attention to that, do you think?
Oh, if they kind of find a solution, yes. But then Zelensky has already said that the Russian representation today is not really the one that he expected. So, and Trump could hardly be there. He's in the Middle East having parties in the sandbox. So yeah,
he's not far. He can test his new jet. He's not far from Turkey down there. So
yeah, but it may not be ready yet. It may not be ready yet. The bar for his Diet Coke hasn't been installed yet, so he's not ready.
His McDonald's counter.
Yeah, maybe it could rather happen perhaps next week. But if you hear and if you see what kind of delegation Russia sends, Putin is not going to go. That is not at the order of the day. So unless, as you say, Trump is jumping in a plane, then Putin may be jumping in a plane too. But yeah, I still want to see it happen before believing it. This one.
Yeah, absolutely. Oil markets as well got another dose of reality. The IEA sees global oil demand growth dropping now to 650 barrels per day for the remainder of 2025. That's down from their last call of 990,000 barrels a day, which was it's been cut about 20 times this year already. So that continues to be dragged down. So demand for oil is still looking pretty weak, according to those agencies. And thus, you're seeing oil, as I say, waking up a bit to the fact that, things might be looking a bit better between US and China, good for trade or whatever, but demand isn't looking like it's going to pick up any time soon. The EIA said about Q1 that the reason for the cut was economic headwinds and rising EV sales. There you go. They're always an excuse, that mob. Right, Kate, anything else? You were mainly about yesterday, so in case I missed anything.
Well, no, not really. I think we talked about the main subjects, and they are not really changing too much. We're not going to go over every line that's been said, left, right, and center. Right. I mean, the global picture. If you look at the central banks, they are still waiting, still in a good place, still waiting for more data. I spoke about yesterday about a bit of divergence at the ECB now happening as well. By the way, that thing about that US swap and stuff, I think that's the media coming up with a story after Nagel said that on the 2nd of April, Liberation Day, the markets were close to a collapse, and then I guess the media just tried to find somebody at the ECB, maybe the coffee lady or so, to tell them the story about what could go wrong, and that's it. I wouldn't think that that's a story where we should attach too much importance to, because the Fed has themselves already over, I think even over an FOMC press conference, that right? That
Yeah.
the swaps are not there to change at all.
Yeah, exactly. So trying to create the smoke and then report on the smoke, as the press like to do now and again. Right, let's have a look at what's going on. Firstly, we've got a bit of data coming in today. It's going to be the start of the manufacturing month, the new manufacturing month kicking off in the US. We get both Empire State and Philly Fed out at the same time today. So we get to see whether manufacturing is going to do anything at all. Also get retail sales. Oh, do we get retail sales? I don't know why we're caught in court. I'm just trying to look. Oh, a lot of data out. Are we getting retail sales? Yeah, there we go. Retail sales. Yeah. And PPI data as well. So a bit of data coming out there. I don't know if there's going to be much for the market to get its teeth into. We saw a marginal change in the CPI data. PPI data can be a bit more volatile. Year-on-year PPI expected to come down to 2.5% from 2.7. The core down 2 pips as well. So keep an eye on those numbers as well. But as I say, this manufacturing stuff, retail sales, again, if it's another solid report, then the market's going to think, well, things aren't going too bad in the US. But again, is it going to give the dollar a big rally, do you think? Or is this another one we need to look to fade given what's happening today anyway, Kay?
Oh no, now you're asking me a good question. I'm traveling light in dollars, really right now. Traveling very light, and it's probably one that we have to let, because let's face it, us retail traders, before we hit the button, the algos have already jumped on it. Watch those retail sales, maybe even the Philly Fed, because they're May data. Yeah, it could be a mover, and you know what? The mood in the market, I think, is still for selling dollar rallies. So I'm going to have a little bit of a counter argument here, that perhaps due to those positive talks in the Middle East, if you get numbers a bit better than expected, we may see a bit of a dollar rally today. I'm just on the tip of my toes. I don't have the position. I will not have the position ahead of any news. But yeah, I don't know if, because better numbers after the after what we saw, I don't know if those numbers will have already the Liberation Day impact. In a way, retail sales should be bad, right? Because if they front run everything ahead of the expectations, that Trump was going to slap tariffs. If they front run everything, the April retail sales should be bad, right? So maybe the market will react more to a good surprise. Just with a question mark at the end of the sentence.
I'm always cautious. Well, I'll say always. I'm cautious at the moment about calling the tariff effect on retail sales. I mean, no one goes to the shops and doesn't change their spending habits because of tariffs. You know, have you ever gone to a shop and said, "Oh, I'm going to buy wine now in case there's tariffs in 2 months' time"? You just go out and buy your wine, don't you, Kay?
I do. But then it doesn't matter whether they have a discount or not. I need some.
Yeah, it doesn't matter if there's tariffs or not. You still want your wine. So yeah, that's another point. So yeah, if people in the wider markets, economists try and draw conclusions between tariffs and retail sales, I'm not keen on it. Let's put it that way. But we shall see. We shall see either way. Yeah, so that's the data coming up as well later on, and then we get industrial production as well a bit later on, and a couple of talking heads and blah 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 blah. I'll be on the beach by then. Well, yeah, Ali, vodka, gin, if it's wet, alcoholic. I tend to like it either way it goes. Right, let's have a look at a few bits and bobs coming into today. We've got oil on the screen now. Do you want to have a little quick look at Euro sterling? I've not traded this one a lot, and it's been respecting the levels really well. We've had this move Tuesday through Wednesday down into this zone, 84, 84.20, held the bottom of it. So it's playing nicely between the bigger levels and the big figures. As I say, I'm not trading this one at the moment for some reason. I'm just lost interest at the moment, but it's still looking respectful. I don't know where it goes in terms of the overall. You're still a bit short, are you, mate?
Yeah. I mean, Ali was asking about it. Yesterday I showed this. There's a bit of a crossroad there, and lines and stuff in this 40-50 zone. As long as we're below there, it feels still relatively comfortable to be short. And then your level just above there. What is it? 84.60? Those two lows before we went
Yeah.
went down.
Yeah.
Just before, just left of that. Those two lows before we cracked lower. 60. Yeah.
Yeah. 60.
That's a decent level, I think, on the intraday to for those who are still short or to lean against or anywhere between 45 and 60 or so. If it starts to move above, maybe something has changed, and then we need to reassess perhaps a little.
Yeah, it's definitely broken the trend anyway. Getting down to this through the 61.8, so I'll probably pull that fib shortly because I don't usually keep fibs that long. But as you can see, this has become a bit of a level on its own up here around that. What is it? Just 84.90, just ahead of the figure, which is a big old zone anyway. So yeah, it's playing nicely with the text. So obviously, Mr. K would like it below 84, but for the moment, that's not where it can get through. So you've got to, no doubt you'll have your slicer on full beam.
Yeah, absolutely. I did. I mean, when it came down to the low 84s, bought some back and then sold it out actually this morning. That little leg again, just because of those levels there up there. But it's still a granddad's pair.
Yeah.
It's not like dollar yet that moves 200 pips in a day. Yeah, that's not going to happen. But perhaps something may be happening relatively soon because we heard already from well, that's been an ongoing story now from Starmer that he wants a reset with Europe, and Macron said this morning that things have maybe a bit changed. And what did he say exactly? Macron. He said something that he wants to reassess and totally reinvent our relationship with the UK. There is no longer a level playing field between the EU and elsewhere. So that was a little bit less positive, perhaps, but that was that little blip up to 40, I guess, in euro sterling.
Yeah.
But as you can see, we're trading 10 pips at a time, and not 200.
Yeah. When's he out anyway? Old Macron, is it July? Was it a bit
Yeah,
later?
in July. I don't know.
I can't remember because
I
obviously
know.
he's heading for the exit door as well, isn't he? After his failed election last year.
Something I need to look up exactly when he's due out.
Yeah, and then we're going to play that game. Who's taken over? Anyway, moving on from that clown. Dollar CAD as well. It's another one. We keep having these little moves above 40, 140, and this big line here. I've got 139, 70, 80, but we cannot get through that 140.20 area, which I highlighted at the beginning of the week. That yeah, you can get a strong move up, but if we can't get above there, then it's showing that we're still not ready to quite break. We're still pivoting around this level. Dips, we haven't quite got down to that old level there, but it's a tough one. This one again, it's another tough one. You can't really. You can try and make trades if you're holding above, holding below, but it's just getting a bit wishy-washy at the moment. What you want to see is perhaps a move like this, a break up above, and then when it comes down and holds it, that's when you want it. So you want it to hold on another move up. So let me get my little pencil out. So something like if you're going to get another failure up here, you want it to do that. Okay, not do that. Blah, blah, blah. Because then that gives you a bit of conviction that this level is now holding a support. And then that'll be the one that might take it out. But again, We're trying to do a bit of that again, holding this level. So maybe a third move up to this 140.20 will be the one that breaks it. So if I do see another failure like this and we get down here, I might give that a go. Put a little bit on there and then maybe do a little break ad if we come back to this level and move through 140.20. And if we get that, we could be up to 141 pretty quickly thereafter. But a long way to go before we start turning this downtrend around. 38.2 up at 141.5, give or take, which was also a bit of a prior level there as well. So some solid numbers just above. So that's what I'm going to look to do in dollar CAD anyway. Just one else, then go on, mate.
Yeah, quite funny still. We've been talking about that already. Quite funny still that the Canada is so much weaker than the mix, for instance. I am just thinking about the USMCA on the trade side of things. There's so much divergence now between the Canada and the mix. Obviously, we know commodities, oil, etc., but and perhaps still a lot flowing through Mexico into the US. But it is quite remarkable the mix versus the Canada performance.
On the what, sorry, mate?
I mean, the mix, for instance, also, and the Canada and then the US, they are part of this USMCA deal, right? But it's remarkable that the mix is doing so much better than the Canada. And as I said, we know about oil and things like that, but the mix is really outperforming if we look only at that deal that they have in place between the three of them.
Yeah, absolutely. And if they're doing bigger business with China as well, that's another positive. I know Canada's had a bit of a bum fight with China recently as well. So, it's again a difference in deals and relationships that might be holding Canada back a bit compared to Mexico. But yeah, I was going to look at the MEX because we look like we finally got a proper break through this 52, 51 area. It's also carved through these lows down here as well. Let's get that off. And we tapped my fib finally. So I managed to get a slice off my shorts on that there. But it's not broken through just yet. Oh, get rid of that crap. It's not getting a hold under this level yet. 19 is the big level below. We're going to have a few little bits and bobs against these lows that are prior levels as well, 25s, 10s, 8s, whatever. But 19 is the big level. And then the whopper is going to be 1850 below at this one. Yeah, go on, mate.
Yeah. No, I'm completely agree. 190520 there is a zone I'm very closely watching too. If that drops below, it could accelerate as well.
Yeah, absolutely. But it does look like we could be on another leg lower. Now we've had this break here, so we've got a little bit of sort of short-term noise coming in here now around this 42, 43 area. Keep an eye on that for bounces. Otherwise, it's back up to this 46 and then the 51, 52 to keep an eye on for that one as well. But I think we need to get below and hold below this fib. Start doing that, then we're probably going to then take the next leg lower and continue this move here. Right, just looking at the clock, mate. I'm going to whack it onto you, sir. Can't find it. Where's my buttons? Oh, hang on. Lost myself. There you go.
Yeah, better with my sound on. Okay, Darish was asking about gold. I think we are hitting a bit of we hit a bit of support here. We crashed through that 31.60-65. Been talking about this for the past shows and days, actually week as well. And as I always said, like if there is less stress in the thing now with Iran saying that they may not that they may stop their nuke things, well, which that is one that we have to take with a load of bags of salt, that comment. But anyway, I mean, less stress in the system, less need for hedges in gold, and that's what what we have seen happening here now. So we are actually, are we back on it? Yeah, we're actually already back back above the 31.65. Yeah, South Africa just said that they produced a lot less gold in March. Maybe that helped a little bit. Look, the overall trend, we're still there, okay? And then I'm really, for me to say that the overall trend is really completely done, you see I've got this big fat line here at 2800, okay? And all the rest, this is now a big setback because we had changes in negotiation, changing in announcement of tariffs, etc., etc. So this is a pretty logic, I would say, move that we had, but we're going to look for levels. I think if we don't get below this one here, for instance, and that was another one that I was looking at, anywhere 30 and a half down to 29 and a half. This, I think, before this one is going already to be a big enough zone as well. Because if you see, we had this move above 3,000, then we came back to 29 and a half, and that's where we started from to really ramp higher up to the all-time highs. Okay, so I would say that this zone here is going to be the first really important one before this one. Okay, I think for as long as we are in this scenario that stuff is doing better, we still may find, and we have seen those. If you zoom in a little bit, just zooming in a bit. Also on the way down, we have seen these. You go down, you see a blip higher. You go down, you see a blip higher. I think those are more perhaps the short-term players. Oh, we don't need it, so we're short. We take profit. We're short. We take profit into zones, and we're short and we take profit again today. Okay, so I think we can continue to see this scenario. Now, I would argue though for gold to really start to ramp higher again, we're going to have to break back above here. I don't think it's going to be sufficient just to 3,200, but we are going, if we get back above 32 and a quarter, 32.30, maybe this correction here maybe over and we can have like a bigger rally. Until then, I would say look at this one, okay? Look at this zone, and then obviously now look at 31, 1530 ish. That's the zone on the day where we hit the bottom. So those are kind of the way I look at it. I don't have a position right now because I don't know down to where this can correct, but if I see further downside, I'm going to start thinking about it. Anything between 3,000, I may start to build up a little bit of a position, but right now, let the market do what it wants to do. Silver, short-term support broke through 32. We had a quick run lower in sympathy with gold, but we are already back above. There, I'm not going to wait for that long to start adding again. You know, I bought it and I let some go against this trend line. I'm maybe on the data, by the way, this afternoon. If they show me a clear direction, we may have a little bit of a move down here, and then I'm going to get a bit more interested again. I want to show you this one just once more, okay? Just once more. And I know I show it on nearly every show now is oil. We are still not able to hold those rallies, okay? And we are already back down to $60. I'm just going to repeat, anything between 63 and 64.80, 65 is now very important, all right? There was a potential for doing a bit of a better move, maybe also on the back of those deals in Saudi Arabia, maybe the Saudis or other oil producers promising to keep oil a bit higher, but then we're already coming back because OPEC Plus is raising their output and looking at a lower take-up. So it is already coming back. So we're still not able to hold those rallies into that zone. Okay, mega important, I think. especially then the top side of this 65 zone, yeah, and in WTI. What else? Well, cable stopped on the 3360. As I said, gateway to go back above 134, and it stopped dead on there, and we are now mooching around 133. What a magnet. We are just always turning around, and for as long as we don't break back below 32, it's probably going to be a bit rangy. Wondering what's going to happen next, and just the levels remain the same. And then, have you looked at the Aussie, Ryan, or not?
Just briefly, mate, if you want to look at
Oh
it a bit
no,
more
I
detail.
mean no, but that's fine. That's fine. Yeah, as I said, and I had to look at this one. As I said, this one is a bit of a strange one, because even after the report that we saw, um, that's what I was saying. Aussie is not doing good on the crosses either. Okay, the bubble boy in our room said, yeah, the market is still expecting a rate cut because higher rates are really weighing on the economy. It could be that. It could be stuff like copper and things coming back, but this puzzles me a bit, and I was looking quite positive towards the Aussie for a number of sessions. And we can find it back. I just took the Euro Aussie as an example, okay? But we find it back in most of those Aussie crosses that Aussie can't keep up, even after such a good jobs report. So that is really keeping me away from having too much in the Aussie right now. Or actually, I've got nothing left anymore in the Aussie because things like that, I don't like them. If we would have had like a bit of a comeback and then starting to the Aussie to do a bit better, I would say like, okay, this is still positive Aussie. Like I've been trading sterling, if you want. But things like that, I don't really like to see, and that's what is going to keep me away from the Aussie trading right now. Um, Ryan, I think I'm kind of done. Is there anything else that people wanted to look at, or?
No, it was,
We're done for today, mate.
yeah, cool. Okay, no
Thanks a
problem.
lot to you.
Yeah, thank you very much. We'll call that a day indeed. Thank you as always for coming to the Flow Show. Lots of data which we'll be covering live on Face later on, so don't forget to join us there. And don't forget our 40% off our monthly subscriptions sale is continuing. So more and more people coming in the room on the back of that. So take advantage of it while you can. Have a good one, everybody. We'll see you tomorrow.